That's right. It's time for AFEX Commodities. And for the weekend at 26th April, the number of deals in the AFEX commodity market was down by 37.5%. Total value traded also went down by over 79%. Well, Michael Martins has a lot to explain to us this morning. Michael Martins is the portfolio manager at AFEX, and he's explaining those. Good morning, Michael. Thank you so much for joining us this morning.
Hi, good morning, Nii. Thank you for having me once again.
Yeah, you're welcome. So deals went down, total value traded went down. What happened during the week?
So if you just take a look at the summary of the activities that happened on the exchange over the course of the week, we saw the total value of transactions traded at the exchange fall by 79.31%, from around 2.9 billion naira to close the trading week at 0.6 billion naira. The total number of contracts traded on the exchange also fell by 76.36%, from 169,774 contracts to close at 40,127 contracts. The total number of deals, as you said earlier, also fell by 37.50%, from 24 deals to 15 deals. The AFEX Commodities Index, which is the ACI, which comprises of commodities, maize, soybean, paddy rice, and sorghum, also fell ever so slightly by 0.96%, from 387.77 to 384.04%. The AFEX Export Index, which contains ginger and cocoa, still remains unchanged, staying at 159.35. With regards to the volume of contracts traded on the exchange over the course of the week, we generally saw a decline in the total number of contracts traded across board from considering all commodities. So we saw the total number of contracts traded for maize fall from around 162,670 to just over 40,000. We also saw, and cashew was the only other commodity that traded in comparably appreciable volume, for trading 6,650 contracts last week to just 119 contracts this week. So that's everything that happened with regards to the volume traded on the exchange. With regards to the price, we saw no price gainers for commodities in the week under consideration, but however, we did see some commodities fall, with sorghum being the first, falling by 3.82%, losing 695 naira in the contract value to close the trading week at 17,500 naira per contract. We also saw paddy rice fall by 3.57%, losing also 695 naira to close the trading week at 18,800 naira per contract. All other commodities, maize, soybean, sesame, ginger, cocoa, and cashew all remained unchanged in the week under consideration. And also the fair trade exchange traded commodity, which is the FETC, also remained unchanged in the week under consideration, staying at 14,008 naira. And as we always say, if you want to know more about the commodities market, you can always go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, you can download our COMEX app on iOS and Android. So that's by and large all of what happened in the commodities market in the week under consideration.
All right, thank you so much, Michael. Well, to go to our conversation last week with regards to prices starting higher this season in comparison to the previous one, would you say that we are at a risk of commodity super cycle?
Thank you very much, Ini, for that question. And like you said, right, the question is extremely important considering our conversation last week and how inflation has sort of influenced how prices have started higher this season in comparison to the previous season. But before I even attempt to answer the question, I think it's important to delineate the difference between a commodity business cycle and a commodity super cycle. And I think we've spoken about this at length during the course of this conversation, right? So the general price dynamics, the supply-demand dynamics that you see happen in the commodities market at any given season, right, is that you have significant supply being available at harvest, and then you have a significant drawdown of that supply over the course of the entire commodity season, with demand very often overshadowing supply, right? And then you see prices trend upwards. The difference between a general commodity business cycle and a commodity super cycle is the fact that the supply sometimes becomes so inadequate that the demand significantly overshadows supply, leading to you having consistently higher prices for whatever commodity under consideration, leading to you having consistently higher prices from one season to another. So just looking at the data that we have at our firm, right? So we've sort of looked at the data for maize, and if we're to use maize, well, we're using maize because it's a proxy for the commodities market. It's the most liquid commodity on the exchange and also in the commodities market in general. It's safe to say that if you look at what the prices have been since the year 2004, right? So we saw a price range of between 32,000 to 35,000 between the year 2004 to 2007. And in the year 2008, where we had the global financial crisis, prices sort of skyrocketed to 47,000 in 2008, and then 63,000 in the year. And then 63,000 in the year 2009. And we sort of saw price range between 60,000 and 70,000 from the year 2009 up until the year 2016, where we had that supply shock, where we had that supply shock in the country, where we had that exchange rate devaluation up until 360 in the black market, and then 305, I think, in the official exchange rate. And then we saw the prices of commodities skyrocket to around 120,000 naira per metric ton, right, for maize, right? So, and prices have sort of inched around that same figure, right? And you saw 80,000 in subsequent years and 90,000 for starting price of commodities for maize. And then in the year 2020, prices sort of started at around 150, 140 thereabout in comparison to the previous season where you just had 90,000. Now I'm putting all those data out there to make a point. If you take an average of what the prices have been from the year 2004 to the year 2015, just before we had that oil supply shock in the country, the average price for maize as a commodity was around 50,500, right? If you take an average of what the prices have been from the year 2016 till date, the average price for maize as a commodity for the month of October, consistently for every single year, has been 100,500 or thereabout. What that essentially means is that prices are currently trading at twice the value that they were trading a decade ago, right? So to generally answer your question, I would say that we are at risk of a commodity super cycle with prices consistently starting higher than they did in the previous season. But I would also say skeptically that we might want to wait for data for maybe the next couple of years to fully confirm that we're in a commodity super cycle. I mean, if you consider just the macroeconomic conditions, right, of the structural issues that we had in the food that we have in the food value chain. If you think about that in terms of lower interest rates providing more liquidity in the market, and if you also think about that in terms of the recent protectionist government policies that we've seen, it wouldn't be out of sort for you to conclude that we might be at risk or we might even be in a commodity super cycle.
All right, Michael, thank you so much. I see you came loaded this morning. Thank you so much, Michael. Michael Martins is the portfolio manager at AFEX. Thank you so much. Well, AFEX time is not over. We have Oluwafunto Olashimo joining us from Lagos. She's the market development manager of AFEX. Thank you so much for joining us.
Once again.
Michael, give us a whole lot of information there. Well, 5 years ago, AFEX set out on a journey to create a transformation impact in the food systems, rural communities, and in the larger society. AFEX seeks to answer the question, how can a sustainable market be built in a scalable and inclusive way, having a long-term impact of livelihoods? 5 years later, what has AFEX done in this regard?
Thank you very much again for having me, and it's always a pleasure to,
have you
always speak to you guys on this platform. So when we started out as AFEX, we started with a long-term commitment to support the Nigerian food system while promoting exchange of fair value across the players within that agricultural value chain. Now, for us to be able to effectively do that, we needed to ask ourselves, how do we create innovative and unique products that would enhance economic growth and at the same time deliver important value to the players within this ecosystem. So for us, measuring impact is all about value creation. It's all about creating sustainable and a systemic change. Now, for you to be able to create value, right, we needed to create framework that could track and measure the impact of our activities in the rural communities where we operate, and within the food value system, as well as the larger microeconomic environment. Also, at the core of our operation are actually aligned with the United States SDG goal 1, 2, 5, 8, and 12, which included no poverty, zero hunger, gender equality, as well as sustainable production and consumption, including decent pay and economic growth. So for us, right, it was more of an alignment with what is currently obtainable at the global scale.
Okay.
Right.
All right, talking about impact, how have you been able to measure this?
So to measure impact, we all know that Nigeria is a very unique place. So for us to even start measuring impact, we needed to first understand the current livelihood and the current value creation within the agricultural value chain in Nigeria. Then we started capturing information and activities that were geared towards productivity, that were geared towards trade and access to finance, that were geared towards enabling and creating a transparent market through the use of innovative technology system, as well as our role and contribution to the structuring of the Nigerian commodities ecosystem. So in order to measure or to benchmark our impact, we consider the contribution of our impact along 3 major lines, which were rural impacts, which were processing impact, as well as the macroeconomic impact. And again, because the SDG goal is core to our operation, alignment of the SDG goal is core to our operation, right? We then selected SDG indicators are set by the United Nations as a measure of the level of our impact in the communities where we operate. So as of today, we have onboarded and profiled farmers, smallholder farmers, which included profiling, registering, and giving them financial inclusion, as well as eventually providing them input and plugging them into a market where they can eventually trade their commodities.
So we also see that unlocking the capital for Nigeria's commodity market is one of your vision. As regards to that, how far have you gone? What are the key milestones?
So again, it's been very interesting journey for us over the last 5 years, right? And the first major milestone for us was in 2015 when we got licensed by SEC as the first private-led commodities exchange in Nigeria. And within the same year, we started our warehouse operation across the key production states for focus crops like maize, sorghum, paddy rice. And then in 2017, we launched our trading platform, our NASDAQ-powered trading platform, which enabled trading of commodities. And the same year, we also started the distribution of commodities prices on a weekly basis. Then in 2019, we launched our AFEX Commodities Index that tracked the changes in prices of paddy rice, soybeans, and maize. And then in 2020, we launched our COMEX platform that allowed both institutional and retail investors to be able to trade in commodity as an alternative asset class. Then later in Q4 2020, we issued our first ever $50 million US asset-backed commercial paper, which was the first ever listed in an African exchange.
All right, thank you so much, Oluwafuntan Olashimo, Market Development Manager at AFEX. Thank you so much.
Thank you very much for having me.
All right, we'll take a moment now. This is Business Morning. Stay with us.